Hey everyone, it has been a crazy fall in stock market. Nifty has fallen below levels of 16,000 and now currently trading at levels of 15,350. So there are high chances that majority of you who have started investment in last 1 year are facing losses in your portfolio. And it seems the bad phase is not over yet. There are still a lot of uncertainties in the market. Especially the US economy is looking in bad shape. The US stock market is on a free fall. Nasdaq has tanked more than 30% from its high. In fact, I'm not sure if you're aware, but this fall in Nasdaq is now even higher than COVID fall. During COVID, Nasdaq tanked nearly 30%, but now Nasdaq has tanked even more than 30%. And we all know the culprit. It is high inflation. We have recently got the data for inflation in US for month of May, and consumer price index has jumped to 8.6% in May 22, which is the highest in last 40 years. Now, one of the reasons for this crazy high inflation is due to crazy jump in crude oil price due to Russia-Ukraine war. That resulted in huge surge in energy and commodity prices. For example, energy prices in US have jumped 34.6% as compared to last year, and it is creating huge dent in consumer pocket. And grocery prices have jumped 11.9% year on year. So basically the situation in US is not looking good. And yesterday US Fed has sharply increased the interest rate by 75 basis points, which is the highest since 1994. And there are more rate hikes expected in the future. That means there is more pain ahead in the US market. Clearly, the stock market in the US is in bear grip. Now, as far as Indian stock markets are concerned, although the fall in Nifty might look like 15% because Nifty touched a high of 18,477 in October 21, and since then it has corrected nearly 15% to current levels of 15,350. But if you look at the valuation of Nifty, its P ratio has fallen from highs of 28 to current P of 19.4. That means there's a fall of 30.7% in Nifty valuation. And at current levels, Nifty P is now available at historic low level. Last time Nifty touched this valuation was during COVID crash. So as far as valuation is concerned, after this correction, Nifty has become very attractive. Although there can be some more correction ahead, but any further correction in Nifty would only make it even more attractive. Now, as an investor, what should be your approach? Especially if you are someone who has recently started investing in last 1 year, then you would be in panic. And that's normal because you haven't seen the bear market in the past. But if you look at the last 40 years of Sensex history, you will realize that there have been some brutal correction in the past, as high as 40 to 50%. And not just once, but multiple times. It happened in 1992 during Harshad Mehta scam, during 2000 dot-com bust, during 2008 housing bubble bust, and recently during COVID. So every time when the market jumps too much, it becomes overvalued and eventually it corrects. And every time when the market tanks, it jumps and make a new high. The only problem is that majority of people end up investing when the market is at the peak, because majority of people end up investing based on past return. So when the market is at the top, the past returns looks great and people fall into that trap out of greed. That's what happened post-COVID. Stock market jumped a lot and many new investors tried their luck. And now that stock market is falling, there's a lot of panic. But this situation reminds me of one great quote. It says, bull market can help you make money, but it's the bear market that can help you create fortune. Let that thought sink in. It is so damn true because bear market is the time when great companies are available at great prices. And the best part with the Indian economy is that it is bound to grow. There is no doubt about it. We are a country with 140 crore people, second highest population in the world. That means there's going to be huge demand for consumption. And second reason is the financialization of our savings. Earlier, people would simply keep the cash at home or invest in real estate or gold. But now, people have started to invest in stocks, mutual funds, and even the physical gold is getting replaced with digital gold. Just to give you an example, 5 years ago in FY 16-17, SIP in mutual funds was rupees 3,000 crore per month on an average. Today, that SIP is more than rupees 10,000 crore per month. Overall, in FY 16-17, the total SIP investment was rupees 43,921 crore. And this SIP investment has now jumped to rupees 1.24 lakh crore rupees in FY 21-22. It means SIP investment in India has jumped 3 times in last 5 years. That's huge. And it is only going to increase. Moreover, India has always been a leader in IT services, but now I see immense growth potential in Indian manufacturing sector. Especially after incentives like PLI scheme, Indian manufacturing sector is bound to grow. And many foreign companies will set up their manufacturing plants in India because we have a huge consumption demand. Overall, I am very bullish on growth prospect of Indian economy. And when the Indian economy will grow, stock markets are bound to grow. The only challenge is that it won't be a smooth ride. There will be ups and downs. So more than anything, stock market is a game of mind. No matter how good you are in selecting the stock, at the end of the day, it boils down to your ability to hold your nerves when the stock falls 40 to 50%. And not many people have that courage to hold their nerves when they see their portfolio down 40-50%. And this correction might last for a long time, 6 months, 9 months, 1 year, or even beyond. So it will test your patience level, and majority of investors would eventually lose their patience and exit from the stock market. But there will be a few people who will create a fortune from this bear market by investing in good quality stocks. Because if you have invested in companies with strong business models, strong leadership, and strong financials, then you don't need to worry. These companies will eventually bounce back. All you need is conviction to not just remain invested, but utilize this fall to accumulate good stocks in your portfolio. Although majority of people lack conviction in stock market because they invest based on tips. But if you understand the business, you will get the conviction. And that conviction comes only with knowledge. That is the reason I've curated a complete course on money management where I explain about the business model, how to do fundamental analysis of companies, and many more concepts. In fact, this bear market is a time that separates the quality stocks from the junk. During bull market, even the poor quality stocks jump, but the bear market will differentiate the good quality stocks from the bad quality stocks. So at this point in time, the most important question is, now that Nifty has fallen below the levels of 16,000, should you invest at current levels? By the way, here we are only talking about long-term investment. So the answer is absolutely yes. The only thing you need to keep in mind is right asset allocation. Do not just invest all the money in stock market. Make sure that you diversify your money across asset class. For example, personally, I invest in equities including stocks and mutual fund, as well as fixed income instruments like bonds, FD, and a small exposure in gold. So currently I have around 60% exposure in equities and remaining in fixed income instrument and gold. Within stock, make sure that you nicely diversify your money across your large cap, mid cap, and small cap. In current situation, it is better to have higher exposure in large cap stocks and lower exposure in mid cap and small cap stocks. And also make sure that you diversify your money across sectors. Do not just stick with a single sector like IT or technology. Diversify across sectors including banking, auto, infra, FMCG, manufacturing, etc. Now the most important question is how to invest in stocks. Should you just invest all your money in one go, or should you invest systematically? Well, personally I think that stock market are going to remain volatile for the next 9 to 12 months. It means you don't need to invest all your money right away. You can break it in parts and invest systematically. For example, let's say if you have rupees 10 lakh, then you can break it in 10 equal parts and invest rupees 1 lakh every month for the next 10 months. But the big question is, which stock to buy in such volatile times? So I would say that invest in the leaders in their respective sectors. For example, in banking, you can pick stocks like ICICI Bank, HDFC Bank. Then in IT, you can pick stocks like Infosys, TCS, HCL. Then you can pick stocks like Asian Paint, Pidilite, Titan, Bajaj Finance, Reliance, HUL, Tata Power, Tata Motor, Divis Lab, etc. Just keep adding these quality stocks in a systematic manner. Even if you buy one share per month, it would compound your wealth in the long term. The reason why I'm suggesting these leaders is because these companies have faced such difficult times in the past and have always emerged even stronger than before. Especially during difficult times, the weak business struggle to survive and leader in the sector gain more market share. So these giants are only going to get bigger. I also hear a lot that these large cap companies are already multi-bagger, suggest as companies that can become next multi-bagger. Now to an extent I agree that large cap companies can't grow multifold times in short duration, but these companies are also less volatile. And even if you can get 15% CAGR return for the next 20 years, you will generate 16 times return. That's the power of compounding. You don't need 100% return every year. You just need 15% CAGR return for the next 20 years to generate 16 times return. But having said this, you can always invest a small portion of money in mid-cap and small-cap stocks. Majority of quality stocks in mid-cap and small-cap segment have corrected nearly 40-50%. For example, CDSL is just a 12,000 crore company, but it is a leader in demat industry with more than 50% market share, and demat industry is growing at a fast rate. Then CAMS is also 11,000 crore company, but it is a leader in Indian RTA segment with 67% market share, and again, there is huge growth prospect for RTA segment. Then stocks like Dixon Technology are leader in India for manufacturing of electronic equipments like your mobile, TV, etc. Likewise, there are many good mid-cap and small-cap companies that are among the leader in their segment and have a bright growth prospect. So it is certainly a great time to add these stocks in a systematic manner. Finally, I think that some of you would be facing another challenge. You would have probably run out of money. So if you have already invested all your money and don't have more money to invest, then just sit tight and keep patience. Do not watch your portfolio all the time. It will take some time, but if you have invested in quality stocks, then you will eventually see good returns in your portfolio. And like I said before, bull market can help you make money, but it's the bear market that can help you create fortune. This quote is absolutely true for Indian economy, and I'm personally utilizing every opportunity to invest in quality stocks. Now tell me in the comments, what is the percentage allocation of equities in your portfolio and which stocks are you adding in this current downturn? I hope you'll find this analysis useful. I'll see you next video. Till then, take care.